welcome to my more important analysis videos with me, Richard Perry, market analyst at Hantec Markets on Wednesday, 15th of March. Now, markets are fairly sort of cautious in front of the Fed, really. You've got equity markets which are mildly positive, nothing really doing. You've got a slight dollar correction though, which is sort of taking place just ahead of the Fed, and that's sort of coming as Treasury are just sort of consolidating their recent moves higher. 10 years just slightly off, which is helping to drive the US dollar. A bit of a correction. Euro and sterling are stronger. There's no real reason behind the sterling rally, although volatility on sterling has been sort of climbing ever since sort of suggesting that Article 50 was going to be triggered at some stage in the coming weeks, and also the prospect of a Scottish referendum. This is Wall Street. S&P 500 again finding support around that sort of breakout level and holding. So markets are fairly much consolidated and flat in front of the Fed. Now the Fed is not going to really surprise markets tonight, I don't think. You've got an expectation of a 25 basis point rate hike. That is pretty much baked in, 90% probability on the Fed funds futures, but it's the language surrounding the Fed move which will be interesting, whether that is a hawkish or a dovish hike. Looking at the dot plots, whether the dot plots extend from 3 hikes to 4 hikes, looking at extension of inflation rates as well. Now it's interesting because we've got US inflation today, but first up we've got UK average hourly earnings, average weekly earnings, which are expected to drop back to 2.5%. Average weekly earnings falling just as inflation is rising in the UK. That's not great as real wages get squeezed. You've also got US inflation and US retail sales. They're both at 12:30. Where are they? Both at 12:30. Expected to drop slightly on the core inflation, core CPI to 2.2, but headline increasing to 2.7. So we've got 2.7, which continues this rise on the headline, but the core CPI just basically sort of flat, isn't it, around the 2.2, 2.3 level. You've also got you've got retail sales at 12:30 as well, expected to be slightly higher on the month, 0.2% for ex-autos, but that is sort of holding on to the strong improvement that we've seen in retail sales in recent months. You've also got the EIA oil inventories, if I can zoom down, 3.5 or 3.6 million barrel build. Again, another week of inventory build. That's 1, 2, 3. What's that? 9, 10 in a row. That would be. So that's not all that great for the oil price, which has recently been sort of appreciating that oil inventories build and falling on the back of it. So yeah, main focus being the Fed tonight. But lots going on in front of that to keep markets on their toes. Now, my chart today is the sterling yen. Now sterling yen has been in this trend lower, and it's a consistent trend and a good trend as well. The trend lower consistently sort of running lower highs, lower lows. It's been sort of consolidating around this 140.50 level. The recent highs of the last 4 sessions have all come in at that level, and unless it can break above 140.75, which is this near-term resistance here, then I think we're sort of going to be tracking lower. But that would, a break above 140.75 would sort of complete a little bit of a head and shoulders reversal, and would imply certainly a move back towards this February high, 142.70 area. So that is a key level of resistance near term. You can see here on the hourly chart, every time it comes up towards that level, it's sort of failing and moving back. You've got momentum indicators on the hourly chart, which are fairly neutrally configured, aren't they, which reflects this recent sort of consolidation. So the market is in the consolidation mode. It looked like it was getting a bit of traction to the downside yesterday, but bounced strongly this morning, and has sort of held on to that bounce. So the initial support is 139.13. So a break below that would be 138.40. Would be the March low. So there is sort of a knife edge arguably in this market going on here, and you are still holding on to that trend lower. So the trend is your friend on this one, and I'd say selling into strength has to be the continued strategy until you get, I think, a break above 140.75, which would sort of complete this little mini base pattern. But momentum indicators are certainly negatively configured, so it'll be an interesting move that we see in this market. So actually we've just had out the inflation or the average earnings, which are lower than expected, so that's going to put sterling on a negative track. I think today, take some of the steam out of this rally in sterling. That is already beginning to come through on this chart, so perhaps a move back towards the support of yesterday could well be seen, and the continuation of this trend seems to be on. So I wish you good luck in your trading, and I will speak to you later. Thank you.